All right, all right. Hi, everyone. Welcome to our summer business and tax strategy series. How has this been going for you guys? I hope you've been enjoying as much as I have been enjoying it because it's been great. You know what? One of the best things about sharing what you know, somehow you continue to upgrade your knowledge. So I thank you guys for giving me the audience so I can share a little bit of what I know week over week. Thanks to everyone who's been showing up, those that watch the replays and those that watch the segments that we kind of put apart to post on social media. Thank you guys. We're wrapping up next week. Can you imagine? Yep, it's going by fast. So no, we have 2 more weeks. Good. Two. Don't cut me. Don't cut me. Don't cut me. 2 more weeks. We have some exciting stuff coming up. We'll be talking about things like trust, even nonprofits before we wrap it up. So this is going to be an exciting last 2 weeks. So don't disappear on me yet. All right. I am Dr. Lily Binglow, a licensed CPA, and I'm your host. Again, always honored to be here. Today's topics are kind of like a good summary of what we've been talking about the last few weeks because I wanted us to wrap this up well before we transition into the next 2 weeks that will kind of change a lot of instead of just focusing on strategies per se. It's going to be a lot of learning things. There'll be new things we'll be covering, and also going into things like trust, going into into the nonprofit space. So I wanted us to kind of put some of the nuggets that we've been learning in case this is the only part that you watch, that you have something to take away with you. All right. So for today topics, we have two main topics. We'll be talking about expenses that business owners overlook, and we'll also be talking about getting prepared for tax season or surviving tax season. It shouldn't be your nightmare season, as some people call it, right? Yeah, thank you guys. Business write-offs most entrepreneurs overlook, and how to build a business that survives tax season. I'll tell you, so I have come across all entrepreneurs that are killing it in their spaces, but when they get that letter from the IRS, it's like all their creativity goes out of the door because of anxiety and fear and worry. And so I hope that by the time you're done watching these two the topics for today, you would have grabbed some really good information to help you get ahead of the tax game. And then lastly, we're going to touch on a few IRS updates. There are updates. The IRS has made some significant updates. I'm sure you saw my video, the video of me on I was on TV. I can't, should I say it? Yeah, this morning, and I was talking about one of the IRS updates. I will be shedding some light on that program today in case it benefits you, and just some other things like mileage that every entrepreneur should keep in mind. All right, what those changes are. So let's dive right in. So we're starting off with write-offs most entrepreneurs overlook, right? Like I said, we've talked on a lot of these things extensively throughout, but I wanted to bring it together because if this is your first time hopping on one of my lives, or your first time watching one of my videos, I want you to kind of keep this list for yourself, okay? It doesn't exhaust all your expenses, but I'm talking about the things that entrepreneurs overlook. All right. Yesterday I was in a networking event and I was asking them, how many of you guys tracked your mileage coming to this event? Just one person, and there were over 50 people in the room, right? So when we talk about things people overlook, we're not talking about the obvious things. If you pay office rent, duh, nobody needs to tell you that you need to deduct your office rents, right? First of all, the amount will be so significant, you can't miss it. I'm talking about the things that entrepreneurs miss, the little things that is easy for you to forget, or to not just put a good plan in place on how to track them, so that you're getting the most out of your taxes. Okay, so I did put a list of about 6 items, and some are obvious, but are you doing it? Okay, so now is to know if you're doing it or not. And the first category is for your the business expenses that you pay for out of pocket. I call these your mixed expenses. Okay, so a mixed expense is the kind of expense that is incurred personally but also used for business. Who can give me an example? Who? All right, I can. Your cell phone. If you do not have a business line and you use your personal cell phone for your business, then it's a mixed expense because it has the personal element as well as your business element. Okay, and there are many examples like that, like those who use their cars. For example, I just talked about mileage. There's usually a personal element unless they have another car for business, but the average entrepreneur, the small entrepreneur, usually just has one car, right? And so this will be another mixed expense if you have a home office space. um Mixed expense because you kind of allocate expenses based on the size of the room and some other things that we'll be talking about. So I'm starting out with those expenses that you personally incur that you should not, please take those for granted because they do add up. Okay. So if you just drive your car for your business, for example, think about it. Let's say in a week, you're doing 100 miles for your business. And it's not hard to get 100 miles. It's just 20 miles a day for 5 days a week. That's 100 miles. Now think about it. If you were doing 400 miles a week, or some people drive even way more because now somebody's like 20 miles a day, that's way more. Okay, so maybe you're doing even 100 miles a day for business and the other one for your personal. That's already 500 miles for the week. 2 weeks, that's 1,000 miles. Guys, that's already over $700 in business expense that if you're not tracking, you're leaving on the table. So that's the first category. Okay, I want you to think about those missed expenses that you're not capturing: personal use of home, personal use of your car, those things that you use personally but they have a business use to them. That's my first one. I'm going to go to the second one. Also, if you go for business events, there are a lot of these things that people just pay from, like you buy lunch out of your card. Yes, it's your personal card, but if you're buying it because you were at a business event, you want to be able to track those. And with everything, it's about record, record, record. All right. So please don't leave those expenses on the table, you guys. You want to make sure you're taking advantage. Second one I want you to really think about is the home office expense. I want to give you a little way to do it. Okay. I mean, an easy way, not little. Oh my God, forgive me. I get excited when I'm on here. Okay. But I want to give you the easiest way to do your home office expense. I know sometimes a lot of people are like, I don't really know what it is. Now, I want you to start today. Go to your house, look at the room where you work at. Okay. Get someone, or if you already have some measuring thing, measure that space in your house. You write it down where your laptop, your workspace is. Now, if you use any other section in your house to store inventory, go there, measure that space as well. Add both of them. Remember, the whole idea of a home office is a dedicated space for your business, right? So if I was using a section of my house or a room of my house to store inventory, I cannot use that for my personal stuff anymore. That becomes part of your home office space. So I don't just want you to focus on having a room. Like, oh, if you have a room, that's your home office. No, you could have multiple spaces in your house that are carrying or preserving your business materials. You should not let those spaces just be treated as if they were personal spaces when you can no longer use them as such. So go ahead, out of these different spaces, take pictures because you have to document. Okay, when you add them up, you find out from the document where you bought your house, or if you're renting, check what's the total square footage of the space you're renting. You're going to take what you added up, you're going to divide it by that total square footage. So let's say the room you work out of, where your laptop is about 300 square foot. You go and you measure the corner in your house where you keep inventory. It's about maybe 150 square foot. And then in one other side, you have files. That's like 50 square foot. You add all of that. That's 500 total square footage. Okay. Then maybe your house is 2,500 square foot total home space. You come now, you take 500, you divide it by 2,500. And then what you will do, you will go and you will multiply that by all your different bills, like your electricity, your internet, your utility, or your water. Because if your house is not paying, if you're not paying those bills, you cannot function if efficiently and effectively with your work. So I want you to add those spaces, divide by your total home square foot, and you start to multiply by your different bills. If you do that every month, by the end of the year, you'll see how significant your home office expense is. Okay, so you want to make sure that you have it documented, guys. Now, in addition to that, we've talked about the home rental, but I'm not talking about the home rental just because you have to be an S corp, a partnership, or or see to be able to use that. So I'm talking about something that every business person can use. If you choose to use the 14-day rental, that's not something you forget. Today we're talking about the things people overlook. Okay, the 14-day rental will be a strategy you will be implementing. So that's also an option. But just keep in mind, if you choose to do the 14 days rental, let's say you're an S Corp, you cannot do both. You would either do the 14-day rental, or you will do your home office space that is allocated for your business. Okay, you don't do both. So please go back and watch the previous videos where I talk about the 14-day rental if that's something you want to look into. Okay, then the next thing that I see people overlooking a lot of times is their the advertising that they pay on social media. You will be surprised. I see people make donations to nonprofits and then they publish their business name, but because it came from their personal account, it almost feels like it's a personal thing. But if the business was able to publish, if the nonprofit, for example, was able to publish your business name, that's an advertising expense. It's no longer a donation. So I want you to think about these things, like those different advertising expenses you pay for, or if you go to an event that you pay to go into, so you could put your business cards there. Those are different marketing costs that we see most people would pay for out of pocket. I had a client who says every time he goes to the what's it called, the fresh market, I think that's what it's called. There's a fee that he has to pay for his business to have access to go in, and sometimes they can put like some of their information in there, and guess what, he just pays $30, but it adds up because he's doing that twice a month. By the end of the year, that's a significant amount of money. Now when he pays cash, it doesn't look like it's a lot, but that's money he's paying out of pocket. So all those little things that you're paying out of pocket for, I don't want you to overlook them. Remember, I'm just talking about the things that we're overlooking, or things that I see a lot of business owners not prioritizing. All right. Then my next one is mileage. I want to talk about this, but I think when I go to the IRS updates, I will emphasize a little bit more. So please get the mileage tracking app called Mile IQ. All right. If you have not been tracking your miles, because it's so hard to track your miles manually, but when you do the Mile IQ, it will always allow you to put in the address of where you're starting and where you're headed. If it's a business mile, it's personal mile, and that takes away the challenge of wanting to write it down, the challenge of wanting to remember when the year comes to an end and you're looking for all your deductions, and now you can't remember all the business trips you were taking. So definitely that's my fourth thing for you. Please make sure that you're not leaving miles on the table, that you're tracking your miles. Okay, let me just go over here. I think that was one of the ones I had. Oh, parking fees too. When you go to places business related and you park, you're able to deduct those expenses. So when you calculate your mileage, things like tolls are expenses that you should be able to write off if you're going to a business event. And even though the toll in your car is personal, please make sure that you're able to track those things so that you don't leave that money on the table. All right. There have been times I've driven to New York to go speak at a client's event or something, and you guys know the tolls is not a joke, but that's hitting my personal account. So does that mean I'm not going to write that off? Help. Let me not curse, but no. I'm sorry. That should not happen, right? Because that's a big expense. Those tolls in New York, they are not fun. Very expensive. So please, when it comes to your auto expenses, track your miles. And if you have to do any trips where you're paying tolls, also you want to track those because they're taken out of your personal account. Kind of going back to what I said on the mixed expenses. All right. So I'm going back. The last, I think that's my fourth one. The next one I have seen people forgetting a lot is the startup expenses. During this time, especially when summer comes around, you have people who have a lot of creative ideas. They are trying to set up businesses. But what would happen generally is that they will pay for the new business out of their own personal account, right? Because you're still setting up, you don't have a business account. Then when tax season comes, they forget to include those expenses. So please document it. So here's a tip for you. Even if you didn't do any business, but you started your business, you can write off up to $5,000 of startup cost. The problem is most people are not tracking those expenses, and because they're not tracking it, when tax season comes, they don't get to write it off. Okay, so when you are in startup phase, which means you have not started making money, you can write off up to $5,000 of your startup expenses. So don't leave that. Again, I'm talking about the expenses that business owners overlook. That's one of them. And then my last one for you, which I see especially during the summer months, is personal development. We go for a lot of personal development events. We go for I probably have a couple this weekend where I'm going to be speaking at. And think about it, the participants coming for those things, when they pay money to the people who are organizing it, those are business expenses. So I don't want you to forget about those ones. I'm seeing a lot of people when I go to places, when I'm talking, I'm always asking, who is tracking this? And you see a lot of people, it's like, oh, I didn't think about that. Like, I just paid for this. I thought it was for me. But the more efficient you become as a person, what happens to your business? Your business benefits, right? So those are just a few things that I put. Don't forget things like gifts that you give to your clients in the summer, especially people in the real estate space. I'll be talking to some real estate agents next week on Tuesday, and I'll be talking a little bit more about these. But those little expenses that you incur out of pocket, just a reminder, don't overlook them. Okay, they always sound like basic stuff, but guys, trust me, there's a lot of money that is being left on the table by entrepreneurs, and I don't want you to be that person. Okay, remember, if you're using your laptop, your personal laptop, for business, that's a mixed expense too. You want to be able to write off a portion of that for your business. So just think about these things, right? Your technology, we've talked about your phone. If you have an iPad, all these different things that you think, because it's personal, my business should not write it off. No, I don't want you to keep doing that and leaving money on the table. I hope that helps. Okay, I wanted to just summarize these. We've covered a lot of business expenses in the past few weeks, but I wanted to just talk on the little ones that I see entrepreneurs forgetting a lot as I talk to people this summer and I ask questions. So just emphasizing for you guys, please don't forget. Okay, so those are my 6 sections for you guys. And the next thing now I'll touch on a little bit is how to get through tax season. Okay, so once we see how we've talked about all these different expenses. A lot of times the challenge that many entrepreneurs face is documentation, because when you don't have the documentation, well, guess what happens? IRS is like, it didn't happen, because if it wasn't recorded, it didn't happen. Right? I mean, it's a tough system, right? But being an accountant and being a CPA and having seen the amount of fraud that people try to commit and the way people try to lie on their taxes, if I'm the IRS, I'll do exactly the same thing. I'll be like, yeah, show me the receipts. If I don't see the receipts, it didn't happen. Okay, because sometimes you have someone who say, my business brought $2,000. I took my clients out and we spent $30,000 for the year, and you made only $2,000. Come on, like, let's see the receipts. Let's see it, right? So, but there are people that, there are good entrepreneurs out there, honest people who operate in integrity, who are not trying to outsmart the IRS. But unfortunately, because they don't have a good system in place, they end up they end up getting into trouble. All right. So I've created my little list here. Lists are always good. This one, I call them my 7 R's of avoiding IRS trouble. See how it goes? Kind of flows. 7 R's of avoiding IRS trouble. I think I need to, what's the word? You guys give me the word now. Jesus. Hi, Lily. You can tell I was not reading a lot, because why do I keep forgetting my words? Is it copy? I think it's copyright, right? Yeah, yeah. Probably do. I don't know if it's copyright, but the 7 R's of avoiding the IRS. I like it. But I just want to give you guys some tips as we are wrapping up all these weeks. We've been talking a lot about business strategies for business owners, talking about, saving your money by leveraging the tax code for yourself. All these different tips we've shared in the past few weeks. And now I'm trying to wrap it up with giving you these 7 R's, or my tips, to make sure that when tax season comes, you're on top of your game. All right. Like I said earlier, I've not seen a lot of things that stress entrepreneurs like a letter from the IRS. I'm telling you, like, you're going to have someone call you at 4 a.m. in the morning, like, I just got a letter in the mail. They don't even know in fact, sometimes there's no trouble, but just the whole idea of it came from the IRS. Now they cannot sleep. And I tell clients all the time, I say, see, you see the IRS, They don't have emergency, because if they had emergency, they'll be calling people, but they don't call. So they sent you a mail. They're not in a rush. Why are you in a rush? I'm kidding. No, you should be in a rush to deal with it, but you should not let it steal your peace of mind. Okay. So when you get a letter, of course, you want to call your tax professional. You want to call us. You want to make sure that we get on top of it right away. But I don't want you to lose your mind. Like, life still goes on, and we'll deal with it, and life will continue to go on. But if you're someone who has dealt with some of those stresses, or if you're someone who's trying to avoid getting into those kind of situations, then make sure you get a pen, because these are my 7 R's. Okay. Please, if you can remember this for your lifetime as a business owner, you're good to go. Okay. My very first one for you, who can guess what I say all the time? Who can guess it? Record, record, record. If it wasn't recorded, it didn't happen. So, dear entrepreneur, if you're watching this, get obsessed with recording your business expenses. Please, please don't take it for granted. Get obsessed with keeping track of everything. You guys know the IRS's budget was increased. So, and then now they're using AI too for audits. So you want to make sure that when it comes to documentation, you're on top of your game. Back in the days, we used to tell people, not used to, like they taught us when we were coming out when I was a young student, you used to hear different experts who come and tell you, like, look, just twist all the receipts. The auditor will not have time to go through. That's a lie right now. It doesn't work anymore. It's nothing like that. Don't wait. You provide all the supporting documentation, and you better have it, right? Otherwise, you'll get penalized, and it's not fun. So please record, record, record. If anything, as a business owner, whether it's your meals, your miles, any expense you're incurring, is yours for taking, but you must have it recorded. Okay. So record, record, record. That's my number 1 R for you. Make sure you're on top of it. I've talked about mileage, things like home office, especially these kind of expenses that have to do with your personal side as well. You want to make sure you have your records handy. When we talk about things like renting your home to your business, use the fair market value. You want to record what the fair market value was that day. You want to have that level of detail available. We're hoping that nothing will go wrong, but if it did, you having your documentation, you're going to sleep better at night. So record, record, record. My first R for you, okay? Then my second R for you is what? Reconcile. You have to reconcile. Why do you have to reconcile? Because you need to know what belongs to who or to what. What do I mean by that? So let's say you start your business and you still have a job, and income is coming from your job, income is coming from clients, okay? You need to take time to go through your records and reconcile what income belongs to you and what belongs. And it's same with expenses. You also want to reconcile and see what you have the receipt for, what actually happened versus also what's coming from the bank, because you always want to make sure that your numbers tie with what the bank has at the end of the month. So you're reconciling. Sometimes you might get charged twice for something. If you didn't go through to reconcile when you only have receipt for one, how would you know? Okay. But you want to reconcile and make sure that for everything that happened, yes, it was indeed incurred for my business. If there's an expense that was not a business expense, I want to make sure that I allocate it to the right category, or to the, or even sometimes just to go back and, in the course of reconciling, recategorize your expenses. Make sure that the right expense is in the right bucket. Okay. Sometimes you see someone classify, them paying a marketing person on social media as a payroll, like wages, W-2 wages. Okay. And then you file your taxes and they're like, yeah, but you never submitted the payroll tax because that was inaccurately categorized. So you want to make sure that you go through your expenses, you reconcile everything, put every expense in the right expense category or bucket, if you want to call it that way. And then make sure that your balances with the bank, they tie at the end of the month. If you at the bank is at the end of the month, you have, $299 left, then you want to understand how you got there by reconciling and making sure that, yes, I did incur all these expenses and that's what we have left at the end of the month. Okay. My third thing for you, I call it your reserve. And when I say your reserve, this is where you want to make sure that you have a separate tax account where you reserve money for your taxes. This is important, especially when your business starts becoming profitable. You want to have that reserve. right? Because what happens most of the time when entrepreneurs get hit with a tax bill, most of them are not ready. And unfortunately, interest, penalties, they start to accrue. So maybe if you file your taxes on time, but you're not paying on time, thank God now with the new law I'm going to talk about, those will get dropped off. But the penalties and the interest, well, penalties will be dropped, interest might not. So it will not. So, but they start to accrue. The longer you take to pay, the more the interest that is being added to that money, as well as penalties. So, as an entrepreneur, you want to make sure that when you receive revenue and you take deduct all your expenses, you set aside a certain amount for your taxes. Okay, this is where we talk about paying your estimated taxes. You want to file and pay those, but just make sure that you have a separate account. It's a lot easier when you're moving money bit by bit than when you have to make a chunk, pay a chunk at once. All right. And then when you also reserve that, you want to have money for emergencies. You know, a lot of times we'll find ourselves in tough situations as business owners. And if you don't have that reserve to be able to help you in those tough seasons, be it, you know, when there's an emergency, be it, even if it's money for you to take your vacation, you have to make sure that you have it separate from your business. So all those different things, when I talk of reserve, reserve just means you're separating stuff. You're separating money for taxes, you're separating money for vacation, you're separating money for emergency. That one is still for business, but you want to have those reserve. Dear entrepreneur, do not wait, you know, until something goes wrong and then you're trying to borrow money from everybody and now you can't find anyone to borrow money to you. You know, as they always say, it's a lot easier to get money when you don't need it than to get it when you really, really need it. But anyways, going back, I want you to have that reserve on more for your taxes, separate account for your taxes. All right. That's my third R for you. The fourth one, please remit to the IRS on time. I kind of already explained that, but when you have reserved money for taxes, make sure that you send it in on time. Now, if you're paying, if you have employees and you withhold payroll taxes, you want to make sure you send it to IRS on time. The IRS does not play with that one. Oh, you see that Social Security and Medicare you take from your employees' paycheck and your own share, and then the income tax you take on their paycheck and the FICA you have to send. The IRS does not play. Please remit all tax funds to the IRS on time. Estimated tax payments, payroll taxes, tax liability from taxes that you owe, please send them on time. Even your sales tax that has to go to the states, the states don't play. Please remit on time. Okay, so remember we started with record. Make sure you're recording all your stuff. Second thing we went to was reconcile. Make sure that you're reconciling everything, outstanding invoices, all your income, your expenses, you're reconciling them, putting them in the right categories. Third thing, you want to create a separate account, which is your reserve, right? That's the third R. The fourth one now is to remit, because once you've created that account where you're putting tax funds into, you want to remit it to the IRS on time. My fifth R for you now is what? Constantly do your reviews. Okay. I have one word for every entrepreneur. Taxes are predictable. Hear me out. Taxes are predictable. The reason your own taxes are not predictable is because you're not meeting with a professional like me. You're not meeting with your tax professional to go over your numbers. And this is where you need someone who is also analytical. So you want to review your numbers every quarter, right? You want to make sure that at the end of the first quarter, you're reviewing those numbers. How did my business do? You have someone that is sitting there going over your profit and loss statement, your balance sheet. So that way you can make an assessment of what your taxes will also look like. If you need to withhold more, increase your estimated taxes, whatever you need to be doing. If you are paying yourself as an employee of your own business, if you're an S corp, you might need to make an adjustment to your pay. You want to make sure that you're having those reviews all the time. When you're reviewing your numbers, you're constantly on top of your game, because when you review, you know how business has performed, you know what strategies you need to apply, you know what you need to do. That's why I say taxes are predictable, because if in your third quarter we know that this is how much you've made, and then you have shared what your goals are for the next year, we can put strategies in place to make sure that you're hitting your tax target. How crazy is that? It sounds like something illegal, but it's not. The tax strategies are there for business owners to take advantage of. So you need someone who can educate you, you need someone that can guide you, but above all, you need someone who actually understands the tax code and can help you implement it in a way that aligns with your goals. So if you're thinking of buying a home next year, is in those reviews that your tax person can give you guidance on. Maybe you can hold off, you can capitalize some of your expenses, so that way you're in a better position to be financially viable to buy a home. Those are the strategies you want to be talking about with your tax person. That's why you want to make sure you're doing your reviews. This is how tax season rolls around and you're chilling. Okay, that's my fifth R for you. Let's go to my sixth one. Who can guess what it is? Who can guess? I think I'm predictable too. I feel like I'm very predictable. Who can guess what my sixth R is? So let's just go down the road again, the list. Okay. First R, I'm sorry. See, my papers just fell. All of them fell down. The first R was to record. Record, record, record. Okay. The second R, anyone on there, type it for me. Anyone who is on there? You record, record. Second one, what do you want to do when you've recorded? You want to reconcile. Because if you record, you need to reconcile, make sure everything is intact, right? The third one, you want to have a reserve for tax funds. So you're not desperate in the last moment. The fourth one, what do you want to do? You want to remit to the IRS on time. You want to remit on time. The fifth one is you want to review with your tax person. You want to meet with your CPA. You want to go over your numbers every quarter. You want to know exactly how your business has performed, so you know what strategies you should be implementing or applying to your situation that aligns with your short-term and your long-term goals. Okay. My sixth one for you is what? Retain. What does retain mean? Retain your documentation. It's not enough that you record and all of that, but you have to retain your documentation. Now, the base IRS rule is you have to retain documentation for what? 3 years. Okay. If you have payroll involved, you want to do 4 years. Now, if the IRS suspects that you underreported income at some point, you as an entrepreneur, you generally will not just choose to underreport income. I hope. Okay. But if the IRS were to find out, they will come for you even up to 6 years. So if you, let's say you're part of a partnership or you're part of a business where they haven't sent you guys your Schedule K1, for example, and you're not sure what they actually made, and you're concerned that a part of your income is not getting reported, you want to make sure that you're keeping your documents for up to 6 years. And then if you're a part of a business where someone may have committed fraud, because some people have gotten into bad partnerships, you want to keep your documentation indefinitely. Okay, so please remember this, because we're talking about getting through tax season without any stress. So retain those. And then in addition to that, every year you would get your documentation from the different people that filed and reported to the IRS that they paid you something. You want to make sure that you have all of those ready when you're going to file your taxes, because you never want to file and then come back to realize that there were some things I did not include. So if you start getting documents early in the year, like from January, meanwhile you're not ready to file to April, you also want to make sure that you're retaining all of those in a very safe place, so you don't lose it. Okay, because we see that happening all the time, and I don't want you to fall into that situation. Okay, then my last one for you guys. If in the unfortunate situation you did get a letter from the IRS after tax season, please respond on time. Ignoring the IRS has never let anyone off the hook. Never. Do you hear me? Never. They will take their time. They will not lose sleep over it, but trust me, when they start coming for you, they hit hard. So please, if it happens that the IRS decides to send you a letter of inquiry asking you for more documentation, you have to respond, and you want to respond in time. All right. So these are my 7 for you. If you're watching this, please take note of all of these. This is how you get yourself to have a stress-free tax season. And if you need guidance, or if you have specific questions to your business and you want you want to have a conversation with me, I do offer complimentary 15-minute consult. Hop on my calendar, schedule one. It's free. You don't have to be a client, and we're not even asking you to come and make a commitment. This is what my gift to the entrepreneurial world. call. Just book it, come pick on my brain, ask me questions that are peculiar to your business that you don't want people to know. In public, you may not want to ask your personal stuff in public, in places like these, on forums like this. But if you come, you can take advantage of the free 15 minutes consult that I do, and I'll be able to provide some guidance. Okay. I hope that helps, guys. I was trying to wrap this up real quick. So I'm going to hop into the updates that the IRS has made recently. And there have been two things that have happened. One of them is why I was on TV today. If you didn't see me, you should check me out on TV, WTKR, I need to calm down for Jesus, don't I? Oh, God. But I'm grateful. I'm always grateful for the opportunity to empower my community. And I think being able to be invited every time for the new segment, this has been a few times. I'm actually really grateful for that. I don't take it for granted. It's always, it's an honor to share what you know, especially when so many people's lives and decisions are dependent on what so don't hoard information. But I want to talk about that, and I'm going to start with it. The first program is called AEP. All right, and this is a program that the IRS is just launched, and this is, in my opinion, if I were to look for the right words, I'll call it the reward for good behavior. Isn't that nice? The IRS is rewarding you for good behavior. All right, so if you've had a good track record, you're getting off the hook for some things, some very important things. So the IRS is rewarding for good behavior. That's my easiest way to say it. But let me go ahead and explain what this is, what this AEP means, okay? And what it stands for. It stands for automatic exemption from penalty. Automatic exemption from penalty. And what does that mean? So generally, when you file taxes with the IRS, if you don't file your taxes on time, there are usually a couple of penalties that you have to deal with. So you have a penalty for failure to file. So let's say tax season rolled around, that's April 15th, and you did not file an extension, or you filed an extension and then the extension season came to an end, which is in October 15th, and you didn't file on time, you will normally have a failure to file penalty. Then there's the failure to pay. So maybe you filed on time, but you owed the IRS some money and you did not make that payment on April 15th. No, I was just talking about a lot of business owners get surprised with their tax bill when they file their taxes, which shouldn't be the case because taxes should be predictable, right? But you're one of those people, you filed your taxes and you realize, and this is not just business owners, even individual filers, by the way, you realize I'm owing the IRS a chunk of money. Where am I going to get, $11,000, $50,000, $100,000, or even $5,000? In fact, some people $1,000, they don't have it sitting somewhere, expecting to give it to the IRS. And if you're one of those people and you're like, okay, I'm going to wait to pay later, there will be a failure to pay penalty that will start to accrue because the IRS expected you to make the payment on the day you filed. So if you fail to pay on that day, there's a failure to pay penalty. Are you guys with me? Keep following, okay? So what happens now is with this new law, now previously, when these penalties accrue and the IRS starts to send you these letters that can give you sleepless nights, you have to go beyond reasonable doubt to prove to the IRS that you probably have something going on. Sometimes there have been people who thought their tax person filed the extension when the tax person didn't file the extension. You have to show documentation to prove this is what happened. I gave them, I told them to do this and they didn't do it on time. And sometimes the IRS might choose not to go with what you provide because you as the taxpayer, you're responsible for filing your taxes on time, right? And then because of that, there's usually what we call your, first time abatement. The first time abatement is something that every person in the US is entitled to. You get one of your penalties forgiven once. So it's like a lottery ticket you get, like a lifetime thing you get. You only get one, which is not fair. Because why, right? Because now you might think that at this point in your life, your $500 bill is huge, and then you make so much money down the road, and then you have penalties for 50,000. You're like, dang it, I could have waited to use my lottery ticket then. But anyways, that was always the process. So if you went to the IRS and you explained why you couldn't pay on time, and someone agreed to waive the penalties, not interest, penalties, then they would use that your first time abatement. Okay. With this new law, this automatic exemption from penalty, What happens now is if you have been filing your taxes for the last 3 years on time and also paying on time, the IRS will automatically waive your penalties. So you don't have to send them a letter. You don't have to call them and try to convince them, I lost my mother, I lost my father, I lost my father's brothers, mothers, uncle, auntie's best friend. You don't have to do that, okay? They will automatically waive those penalties. That's your reward for good behavior. And going on from 2027 is actually going to replace the first time abatement. And what does that mean? It means you don't have to use it just one time. Every time you have an issue, the IRS will look at what? Your previous 3 years. They'll look at your records, your behavior. Have you been good? IRS is becoming Santa. What have you been doing in the last 3 years, right? Do you deserve the waiver or not? But now it's automatic. And some people might still get a letter in the mail if you are late on paying your taxes. However, those will get waived. Feel free to call them if you got a letter and that tells you, hey, there's a penalty. You can call them because this will be, especially if you have the record. Now, you have to remember, you must have been paying your taxes on filing and paying on time. Okay? For people who have owed, if you're lucky enough you were not owing and you filed the last 3 years on time, this year if there was a penalty for failure to file, which generally just applies to people who owe. Isn't that sad? Like, penalties only apply to people that owe taxes, because if you don't owe taxes, you're getting a refund. You have up to 3 years to file. No penalties. Up to 3 years, because after 3 years, they'll not give you a refund. Okay? But when you owe, it's like you're already in trouble and we're going to hit you even harder. So, yes. So I think this automatic exemption is an incredible program. I'm really grateful for that because I've seen clients just under so much stress because of these penalties that they have to pay, these late filing or late payment penalties when they come to us sometimes. So I'm happy about that. So if this is your first time hearing about this program, please share it with someone that you know is dealing with a huge tax bill, especially if they have significant amount of penalties that have been assessed for them. Okay, so if someone, even if they filed this year and they filed on time but they haven't paid, they will normally have a penalty for failure to pay on time. But going from now on, the penalty will be waived. Okay, so I wanted to make sure that I had that one. Now, the next one, update from the IRS, and I think I'll stop at these two because these are the ones that are the most common. I'll probably touch on some other ones just lightly, but these two are the ones I really want to talk about. The next one is your mileage. Guys, I did a little post the other day. The IRS increased, in fact, they adjusted the miles as well as some other stuff for inflation. And the mileage has gone up to 76 cents. For every mile you're driving, you have a 76 cents deduction. It always looks like it's nothing when you think of it from the perspective of, it's just 10 miles, but it adds up. Okay, so per this update, starting July 1st, all the miles that you drove for business, you will be able to write off 76 cents. For the first half of the year, it was 72 cents, 72.5 cents. Okay, so for every 10 miles you drove, or let's say it was $7.25. All right, now for every 10 miles you drive, that's $7.60. Now, when it's in these lower numbers, it looks like nothing. Let's take it a little bit higher. Okay, if you're doing, I hope I did my math well, Lily. Anyways, let's take it higher. All right, so if you're doing 100 miles a week or a day for some people, right? 100 miles a day for 5 days, that's 500 miles. If you do that for 2 weeks, how much is that? 1,000 miles. If you do that for a month, how much is that? That's 2,000 miles. If you do that for a year, how much is that? 24,000 miles for a year, right? Because for each month you're doing 2,000 miles, and then for the year, 24,000 miles. Per the IRS, the first half of the year, from January 1st through June 30th, you're going to apply the 72.5 cents on the first 6 months of the year. So we're going to do 76 72.5 cents for 12,000 miles. And then for the rest of the year, from July 1st, we're going to apply 76 cents. Guys, that's a lot. That's a significant amount of deduction that you're leaving on the table. So think about it. For 10,000 miles, you have $7,600 for the second half of the year. If you drove 10,000 miles from July to December, that's 7,600. I need to always simplify. I have to remember, simplify the numbers. If you drove, so let's say 10,000 for the first half of the year, that's $7,250 that you have to write off. For the second half of the year, you drove 10,000 miles, that's $7,600. Please do not leave this money on the table. Okay, I'm so excited about this mileage update, because most entrepreneurs are always on the road, right? Most of you work from home in your full-time job, but then when you have to hustle for your business, you're driving out to see clients, you're driving out to run errands. Don't take this for granted. I sometimes I sound as if it's my money that you people are leaving on the table, but I'm very passionate about it, because the people that end up paying the IRS significant amount of money are people that just took little things like these for granted. All right. Meanwhile, it's yours for the taking. So I want you to remember this. From July 1st, miles have gone up. Okay. Oh, my time is almost gone. All right. So I hope you remember this. These were the two updates I wanted to talk about. Most of the other ones, I think I touched on it. Some of the thresholds for 1099Ks have changed, as far as how much you need to make for them to issue a 1099K. You already know bonus depreciation is here to stay. So those little updates, I've touched on these for the past 2 weeks, but these two were the ones that came up recently that I think could really be beneficial to every business owner. All right. So I'm going to wrap it up here. I've been saying I would, get out of here in time. Thank you guys for being here. I hope I didn't go overboard, that I kept it in a good time. So please share this information with someone that could benefit from the exemption from penalties. I think it's incredible. If you have that business friend who is constantly driving to go sell their products, let them know that they should not be leaving money on the table. All right. Thank you guys so much for watching. Any questions? Or I think we're good. Let me find out from the team. Are we good? Are we good? Are we good? Any questions? Any comments? And yeah, please check out my video on TV. Check out Dr. Binglow. Don't mind me, guys. So thank you all so much for being here. Let me make sure. Okay, so I'm looking now. Yes, recording is a real deal. Thank you so much, Ronald. Thank you for being here. Yes, family man. Yes, yes, yes. I do like that. So, okay. So no questions. Thank you guys so much. We have 2 more sessions before this is over. Please share with a friend. We're going to be talking about trust. We're going to be talking about nonprofits. We're not forgetting our nonprofits. That's we have some really good stuff. So if you're a founder of a nonprofit, you're thinking about starting one, or you're serving in one, I will be sharing some incredible information on that. And then for people who have been thinking about setting up a trust, you're going to need to tell them to be here next week, okay? Because there's so much talk about, you should create a trust. But should you? And if you do, what does that even mean? How does it get taxed? What does that look like? How does it function? How does it operate? Okay. Do not miss next week. Thank you all so, so much. I really appreciate you, cousins. Like I say, we're all family. If we're friends on Facebook, on LinkedIn, on Instagram, we're cousins. So peace out, cousins. Keep enjoying your summer. All right. Thank you so much.